Good morning, everyone, and welcome back to the show. Today, I'm so glad to have a senior living expert on, Doug Fullaway. Doug, thanks for being on.
Happy to join.
Awesome. So, everyone, Doug is the president of 14Plus LLC, a firm that specializes in investing in the growing senior living market. This market is growing faster than any other demographic and has produced returns superior to returns over other types of real estate because the need for services for seniors does not decline when the economy slows. So, Doug Fullaway, we are so glad to have you on the show to share your expertise. Why don't you take us back in time and give us some color on a little bit more about your background and what drew you into senior living?
Certainly. I was trained as industrial engineer. I was an officer in the Marine Corps for a while, and went back to business school. And I took a job in the high tech world, electronic design kind of space. And I was in that space for almost 20 years. I had the good occasion to live in the Netherlands for a couple of years with my family as the operations manager. And then I moved to Singapore, where I was the managing director of our business in all of the Pacific Rim. So, China, India, Australia, Japan, everywhere. I loved it. My kids loved it. And then I came back to Portland to help fix some software. And, I had joined another company to help turn it around. Some venture capital guys hired me to fix it. And I had fixed it in the sense that I got the product done. I'd raised the money that was needed. And then 9/11 hit. And nobody was buying anything. And, I went to the board and said, hey, it's time to let everybody go, including me. Just keep the two founders. Try it again in 9 months when people are buying again, because I don't think this is going to get fixed in a hurry. We don't have enough money to keep all these people employed that long. They didn't like what I suggested. They fired me on the spot. And they bankrupted the company 60 days later, by the way. But in that time period, one of my friends came to me and said, hey, there's this software company that's really struggling, and I think they just have a sales problem. Would you come look at it with me? And I said, oh, absolutely. He's the nicest guy. PhD from MIT, I've been a professor there for years, had managed a $300 million business, and just a great Star Trek fan. he was a really good friend. And I said, of course I'll go look. What do they do? Well, they do software for assisted living. And I said, what's that? I'd never heard of it in 2002. So I went and looked at the software. Indeed, they had a sales problem. They also had a product problem. We fixed those things. I ended up being the CEO of that company. And from 2002 to 2012, we grew that to be the largest supplier of software to assisted living sites in the United States. We had thousands of them as customers. And so because we were building software that was about the operations, it was about the back office. How many people do I need? How do I schedule them? How do I get the bills done? How do I make sure I'm complying with all the laws in the state? All those kinds of things. I had to learn every little detail there was about these properties. So I spent a lot of time, having lunch with nurses or hanging out working. And I actually worked as a caregiver for a while, and I got certified as a assisted living nurse, certification here in the state of Oregon, just to learn everything. And that's how I sort of got into the space. And about 5 years into that, I was calling on somebody to sell the software to them in a small town in Eastern Oregon. And when I mean small, I mean population 12,000, small town. And the lady who lived there had built the most beautiful assisted living community. And I asked her, I said, did you go borrow this money? What inspired you to do this? She said, well, I was born here. I grew up here. And she owned every movie theater in Eastern Oregon and Eastern Washington. And she had made a fortune. She had made a lot of money. And that was her give back to the community. And I was trying to sell her software because she was losing money. She was losing $700,000 a year. And I looked at it and I said, well, I think I know what the problem is. Let me put the software in, no charge. We'll see if this is the problem. Well, she was overstaffed badly and didn't know it. And they didn't really understand some of the basics about controlling costs. And, you know, it was a problem. I said, so what does he really want to do with this long term? He said, oh, I want to sell it. So I rounded up 5 of my friends, and we put up just over $1 million of equity, and we borrowed the rest, $4 million, to buy this property from her. Now, interesting little thing. It's like, how do you fix the marketing in a town with 12,000 people? You know, websites. Who cares about websites? That was not how they lived. So we started doing this thing because we realized that there's a very famous baseball player, Jacoby Ellsworthy, who grew up in Madras, Oregon, and played for Oregon State. And he's now, you know, a starting pitcher for the New York Yankees, who makes tens of millions a year, but the nicest guy. So we called him and asked if he would come back for a little league barbecue. So every summer for years, we would put on this barbecue, and we'd give him a case of baseballs, and he'd sign autographs on baseballs and hand them out. That was our marketing program for the whole year.
That's awesome.
So it was lots of fun, and it was really great because this building had about 80% of the residents were being paid for by Medicaid. And the first thing I did was I had to go to the state and negotiate with them because our contract was up. And I said, you know, I think we're going to have to cancel this, because let me show you my books. We can make this private pay, and we can do much better. And so I either need to get this much more money somehow, or I need to change this. Well, they decided that they didn't want to change. So they decided they would find a special rate they could pay for advanced memory care. And all of a sudden it worked. So the investment has paid its 8% preferred return now for 12 years. It's been great. We bought it for $5 million. We spent $1 million more to change one of the buildings to skilled nursing. And then somebody came along and said, oh, I want to buy it from you. Here, I'll offer you $11.5 million. I'm thinking, oh, good, payday. I get to make some money. No, wrong. I made a horrible mistake, and I didn't even know it. You see, all the investors in the group had different objectives. Some of them were about, let's make some big money. Some of them were about, look, I just want to take care of these people. I don't care if I make a nickel. And others were all about, you know, I really like this dividend, because we were actually paying closer to a 12% dividend. And they didn't have too many investments that did that, so they didn't want to sell. So I'm still in that investment. So lesson for limited partners that I learned the hard way. You better know who the other limited partners are and what their objectives are. And you better know what the decision process is for a sell. Because if your objective is to be in and have it, you know, give you a 22% return in 4 years, you can find those investments. But somebody has to be able to pull the trigger and say, yeah, we'll sell. And in this case, we set up as member managed. In other words, we all had to vote on it. And we had to have agreement. Well, the biggest investor loved his dividend. He didn't want to do it. We were done. Couldn't sell it. So I kind of stumbled into the space. I'd never read an operating agreement. I didn't know. We took advice from the lawyer. It turned out to be bad advice.
What was that advice?
Well, that advice was be member managed. You don't need to hire a manager. You don't need to have a manager manage this for you. Sounded reasonable. No, it was not reasonable. It was really, really naive of me to do that. So, you know, after a while, I found myself more and more talking with the owners of these properties. And, you know, someone would call me and say, you know, I want to retire. My kids don't want to do this. Do you know somebody could buy it? I really don't want to pay a broker. And I said, well, look, I can't act as a broker. So, you know, I'm not going to do that for you, but I'll give you some ideas of what you could do. And, you know, in one case, somebody called me up and said, I'm trying to sell this and nobody's really interested. I said, well, how much are you asking? And he gave me a number and I said, well, how'd you arrive at that? He didn't have great logic. And I said, well, let me see your last year's worth of books. And the first thing I had to do was take the expenses in there that wouldn't be part of an ongoing business, because he had every expense in the world in there. You know, it was his personal business. He was minimizing his taxes, nothing wrong with that, but he had to clean up the books. And I cleaned him up and I looked at it and I said, well, this thing's actually only worth about $6 million. And he was asking 11. And I said, that's why you can't sell it. That's why no broker will talk to you. I mean, you need to fix this. And I found myself more and more understanding that, my training in business helped me look at the financials and say, well, look, this valuation is not right. And so I started advising people. And then one year I went to the National Investment Center. If you want to learn about the senior living world, a great place to go is to nic.org, because it's an organization that's sort of everybody in the industry raising money. So they have good statistics, and it's a great place to go learn. And I was looking at the data in there one time, and I would go to their conferences every year. And a bunch of my buddies said, hey, we're going to show up the night early and we're all going to go to dinner. No coat and tie. We're just going out to have some fun. I thought, great. We get there, we're private dining room, eating away and drinking away and having a good time. And one of the guys gets up and goes ding, ding, ding on his glass. And he said, okay. And I'm thinking, wait a minute, I didn't come for a sales pitch. I came for dinner and some fun. And they said, okay, give Doug your cards. And I went, what? They all handed me a business card. On the back was written a dollar figure. The smallest one was 50,000. The biggest one was 700,000. And they said, go invest for us. We know you know everybody. We know you know who the good ones are. We don't have time to do this. Go invest for us. I didn't want to let anybody down. And I found out it wasn't that hard. I mean, it was really easy for me to pick the good ones and the bad ones because I knew who were the good operators because of the software. I knew who was doing a good job because I had an unusual insight. Mm-hmm. We sold the product. We gave everybody a dashboard. And if they wanted, they could give me access to the dashboard. Mm-hmm. And almost everybody did. So I could look in there and see literally over 1,000 sites of data in real time. It wasn't hard for me to go down and say, well, these three are the ones I'm going to call. I found after a period of time, big company, RealPage, great company, came along and bought our company. I continued to work for them for 4 years, and I learned all about all the multifamily world and all the tools and the economics and what was different. I learned some things multifamily was doing much more sophisticated and better than senior living. And I moved some of those to senior living. So for example, if you go online to rent an apartment, there's always a phone number you can call. And you think, how does that work at 10 o'clock on Thursday night? Well, they have a call center. And when you call and you call a number, that number is associated with a particular apartment building. So what pops up in front of the person who answers is all the information about the building, including the calendar of when you can schedule a meeting. 85% of apartments are handled with call centers. In senior living, I could find 3 companies. Nobody did it. So I took that product and I moved it to the senior living business, and RealPage said, oh, it won't work, it won't work. And I said, sure it will, we just have to train people. 1 year in, we had a $4 million business just with call centers with senior housing. So I kind of got tired of flying to Dallas every 6 weeks to ask permission to do everything. And in this very awkward position, I'm just a VP and I'm sitting in the room with the CEO and 6 senior VPs. And the CEO is always turning to me and saying, Doug, will that work for senior living? Will that work for senior living? And if the answer was, no, it won't for these reasons, he would turn to the senior VP and say, we'll fix it. So I found myself in a very politically difficult situation. Mm-hmm. And I was making more money with helping people invest. Mm-hmm. So about 5 years ago, I quit and I spent full time helping people who are operators either raise the money. And typically they've done it the first time with friends and family, and now they're at the stage of there's no more money there. Sure. And they need a group. They really need to go to a group who's syndicating. And while I don't necessarily do the syndication myself, I will take it to a group who's doing syndication, or I'll take them the right place. So that's sort of how I wandered into this. This wasn't some carefully thought out thing.
Yeah.
I stumbled along and learned.
Well, that's awesome. Doug, why don't you give the listeners an idea of why they may want to consider the senior living space over or in addition to multifamily?
Okay. So I think that, when you're a limited partner and you want to invest, you want to make sure that you're putting your money into something that's going to pay you back on a regular basis. Cash flow is important. So multifamily does that. Senior housing does that too. But there's some differences here. And they're both good news and bad news. If you understand them, they're really good news. A multifamily property, if you've got 100 apartments, will have three employees, maybe 4 at most. If you have an assisted living community that has 100 residents, it has 55 employees. It's an operating business. And that's one of the reasons it scares lots of investors away, saying, oh, it's too complicated. Well, yeah, except that if you look at the financial return, it absolutely produces a better return on invested income. There's a group that's called NACREF, National Association, or National Accredited Real Estate Investment Fiduciaries. These are a group of accountants who take the data from all kinds of industries and they put it together so they can compare it, and then they produce reports about the returns. And these go back for 15 years or 20 years. So you can see what the unlevered return is for multifamily, for industrial, for retail, and so on. And for many years, the average return in senior living was 14.7%, unlevered.
Wow.
Whereas multifamily has always been 2 to 3 points less. Now, in the last few years, because the economy shifted, industrial warehousing has picked up and has done as well, or for a short period of time, better than senior housing. Now, that's not to say it will always be that way. It's just that, when you have places you can put your money, you can compare things. Now, make no mistake, I'm currently underwriting a deal for somebody and raising the money for them for building what I call vacation homes. They're putting tiny homes on lots on the Colorado River in Arizona for people who are boating enthusiasts. The IRR is better than 80%.
Oh my gosh.
There are always deals out there that are maybe a little unusual and great if you'll take the time to really dig in and understand. So when it comes to senior housing, one of the reasons you might want to do it is it's just got a better return. There's a second reason you might want to do it, and that is, you love it when there's a big tailwind and the demographic shift is in process. There will be 11 million new people in the next 10 years who are over 75 years of age, not over 65, over 75. That's the point at which people become interested. And actually, the typical person who moves into assisted living is actually 84 years old. The people who move into what's called active adult living, they really don't need medical help. They just are tired of cleaning the gutters and mowing the lawn. And they love to be with other people who are retired or semi-retired to do things with. And so why not spend $2,000 a month to live in a really nice downsized place that has a concierge who can arrange theater tickets where you can go down and have breakfast with your friends and go play golf. So that's the 75 and over. So there's such a huge increase. Now, do all those 11 million people, are they all going to move into senior housing? No. About at least 10% of them. And even that number varies depending on where you are. The average across the country is currently about 11 or 12% of those over 75 move in. But where I live in Portland, Oregon, it's 27%. Now, why is that? Because if you go to Pittsburgh, it's 6%. What's going on? So for those of you thinking about investing, the first thing you want to do is get to know your local market. You really, really want to understand the demographics of what's going on.
So you're not sure
where people are going.
So you're not sure what the difference is between Portland and
Oh,
Pittsburgh?
no, I have my own theories. I have no official study, but I can tell you some of the differences between those. One is this assisted living Medicaid waiver program. That is, instead of the Medicaid dollars going to pay for you to go to skilled nursing, there's a waiver that says you can go live in assisted living. The first program in the United States was in Oregon. So the
Can you say that again? It was assisted living waiver.
There's a Medicaid waiver program. That is, the Medicaid dollars, if you need to get help, move in someplace, will pay for you to go to skilled nursing. And there's a waiver that allows those dollars to be used for assisted living. And Oregon was the first place that happened. So the senior housing business sort of grew very nicely here. And as a result, it was very competitive. And the state regulators did a good job, good stiff rules, good careful oversight, but business-like. That is, they weren't overly punitive. They were more, we're trying to help you do this the right way kind of people. And so the market grew nicely. And because of it, there was lots of product. And so I never forget one time I went to see my dad for lunch. He said, well, Mom and I are going to move. We're going to move into this assisted living community. I said, what prompted that? He said, well, I play golf 3 days a week. One of my buddies lives at this place out here. And I had lunch, and he said, I was sitting there realizing, your mom's social life isn't really great anymore because of a bunch of her friends have died. And I go off and play golf and have a great time. And she's sitting at home alone. And she said, that didn't seem right. And we went and visited, and she doesn't have to worry about cleaning. She doesn't worry about cooking. She can play with friends who are her age. I can have it just was a social lifestyle thing. And so everybody here knows somebody who lives there. So it feeds on itself. Now, why doesn't it happen in Pittsburgh? The culture's different. There are many houses that have grandma and grandpa, mom and dad, and the kids in the same house. You don't find that in Portland, Oregon. You find that more in Pittsburgh. It's just a history thing. So, it's a really interesting market to invest in. And by the way, this is one of the things that scares some people off is, it's too complicated. Nah, it's just local. You got to understand what's going on in the 1, 3, 5 mile, or as I like to put it, the 20-minute drive circle. Because it doesn't really matter what's happening 100 miles away. What matters is, for this investment, does it work? So in that way, it's the same as multifamily, but it's different in that you got to understand the demographics.
Very interesting. Yeah, there's so much there, the overall national demographic trends, but also the importance of staffing and having a strong operator. I mean, one question that I have is, if I know the importance of operations in senior living, there's 55 employees for every 100 residents, for example, I think you said. Mm-hmm. So how is it that overall the return, the unlevered return is like 14% or whatever it was, like a couple points higher?
Yeah.
Is it just that everyone's doing pretty well?
It really is that there is real value in the product being delivered. And let me give you an example. If you live at home in your house, you have to pay for, insurance. You have to pay the mortgage. You have to make sure the lawn gets mowed. You have all these maintenance costs. You have to buy food. You have to cook the food. If you want to do something with other people, you have to go out or have them come see you, or use Zoom, I suppose. And so if you take all those costs and put them in one column, and then you do the same thing with assisted living, not only is it less expensive, but you get a much better social life. So there's a real value, and people are willing to pay for it. And that's what drives that up. The other reason they move is, say you fall and break a hip, and no longer are you mobile, and you're living in a 2-story home. And the doctor tells you, or tells more likely your daughter, you really shouldn't be at home. You should be in assisted living. So there's a need component here. I start to, I don't eat well because I'm cooking for myself. So my health goes badly. I I need help with my medications. I get confused about, is it Tuesday or Thursday? And am I supposed to take this at 2 or 1? You know, what are the rules about all these things? So when you need assistance, you need assistance. You know, you're going to go someplace because you have to. People don't wake up on Saturday morning and say, hey, Martha, let's go look at assisted living. It sounds like fun. That's usually not what happens. They might say, let's go look at cars, or let's go look at new houses. But there's this certain sort of unspoken thing, which is, I'm getting old and I have to do something. You know, I have to face reality, which is, I'm no longer, 22 and can go skiing. It's just not. I might go skiing, but I might not ski as hard, and I might have troubles getting there. And that's not something any of us want to face. So it's a need-driven business.
Yeah.
You know, when 2008 came along, and people couldn't sell their house in 2009, they had economic issues. Maybe they moved down a notch in the multifamily apartment they were renting. They didn't leave assisted living. They stayed right where they were. And so the revenue just kept coming.
Yeah. I want to hear your take on one thing that touches on that, which is this idea that some people value their independence so much. One of my friends told me a story about someone who fell on the ground, like an older man, and he was crawling around his apartment and then calling her and telling her that everything was okay for like 2 days. And finally, she's like, I'm going to come check on you. And, she found that he had, not been able to really take care of himself over those last 2 days because he couldn't stand up. So what do you think the difference is between people who, 11% to 12% moving into, of the 11 million moving into either active living or assisted living? Is it a personality thing that attracts, like, say, a small portion of those older people to move into active living? And I'm talking about active living instead of assisted living, but, because it seems like, I'm a social person. I like to be near my people. But so it seems like, why doesn't more than 10% of people move into active living?
So it isn't 10% who move into active adult living. It's 10% of seniors who move into some kind of senior housing. Okay. So, but the question your friend is asking, and some people want to be independent. It is really the fact that people want to be as independent as long as they can. And hence, if you do a survey, it's been done several times in the last 20 years, you ask somebody if they want to move to assisted living or they want to move, 95% will tell you no. I want to stay by myself. I want to stay independent. And some of those, their physical needs get to the point they just have to move. And so they move. And very often the daughter realizes this when they go visit and the counters in the kitchen aren't clean, the meds haven't been taken, the laundry needs to be done. And it's like the daughter goes, Mom, I really want you to be well cared for here, and this is not happening. We need to get you to move. So you see that mom still wants to be independent. And mom wants to stay home because there's the kitchen table, there's the dining room table where we had Thanksgiving dinner for 30 years. That's where there are pictures on the wall, where memories of everything. You don't want to let that go. So that's always going to be the case. That's just human nature. From a business point of view, what it means is good business people realize this. So they build a product which is focused on what people want. So active adult is, I can still play golf. I like to play poker with my buddies. I'm still fine being independent in my apartment. I want to be able to cook in a nice kitchen. A little kitchenette doesn't cut it. I want a kitchen. So that's a product called active adult. Now, literally across the street from that might be an assisted living community where people need help with a walker. They can't bathe themselves because it's just they're not agile enough to get in a bathtub or take care of themselves in a shower. They need somebody to help them. They realize that, or the daughter realizes it, and they move in and they get the help they need. So one of the things you look for in the investment is, did we muddle all these products together in the same building? Because that's going to turn some people off. Now you can do it. Beautiful building here in the Portland area. One wing is all independent, and you must buy in because they expect you to stay a long time. And they're beautiful, large apartments. It has a dining room for itself. On the other side of the building across the lobby is the assisted living wing. And, the rooms are smaller. They have their own dining area. So they've really catered to different customers who want different things. Now, even within that, we're starting to see, just like hotels, there are different price tiers and different offerings. We're seeing that in senior living. There's some beautiful, what look like residential homes on the street, 3 of them side by side. You would never know that inside they have large apartments. And in one building in the basement is the gym. In another building in the basement is parking for everything. In another one, there's a large multi-purpose theater room. And then in every one of them, there's a certified nurse assistant on duty all the time to help people.
Makes sense.
So in the neighborhood, you would never know this. It's because this is for groups who don't want to be with 100 other people. They're not cheap. They make a great profit. It's a very unusual product, and I'm seeing more of it. So all these concerns, if business people look at them, they can figure out how to address them and create a nice business.
That's very interesting. What would you say is, I'm sure it varies per market, but as far as like the biggest gap, because I'm assuming that, the current stock of senior living is not quite meeting all of the demand for these various types, active living versus assisted living versus memory care, et cetera. So do you see like any trends and where the gaps are?
I think that, there are a couple of things that are worth knowing about. And that is, it used to be like every other, like the hotel industry, there was sort of one flavor fits all, Holiday Inn. Well, senior living is going through the same evolution of creating different tiers of these things. There's certainly lots of them out there that cater to the high end. They're charging $5,000 a month to have an apartment and the care and the food and all those things. There are a lot of seniors who can't afford that. So I'm seeing more of them built for what's called the forgotten middle. That is, they can't spend $5,000 a month, but they make too much. They have too many assets to be covered by Medicaid. So there's this group in the middle. There's an estimate that number is someplace between 10 and 15 million seniors who, if you could offer a nice setting for $3,000 a month or less, would absolutely move in. So I am seeing that trend. Lots of people are trying to figure out how to do that.
Is that for active living or assisted?
Yeah, both.
Okay.
I'm seeing both. Certainly with assisted, there's a certain component of the labor cost that you just can't make go away. So that cost will be there, but you can change the physical plant by redesigning it. If you were to go into a really successful active adult business, a good example of that is a company called Avenida Partners. It's a great one to go look at their website. It looks like a beautiful multifamily apartment. What you can't see from just looking casually at the pictures is all the things the concierge has set up and can do. You don't see that the actual physical layout of the building is a little different than a pure multifamily in that, there's a concierge desk. There is a place for people to have small group gatherings. They've designed the common areas to be used by small groups, and they've spread the common areas out across the building. And they get about a 20% premium per square foot over a multifamily offering. It's just an example of tuning the product and the services to match the market. Because I've seen that where literally across the street, a company called Harbor Chase has put up an assisted living building, and those two companies get along great. They really don't compete with each other. When you're 75, you move in and you stay 7 or 8 years in Avenida Partners. And then when you start to need physical help and somebody to do all those things, you move across the street into the other building, into a different business. So they help each other.
Yeah, very interesting. Well, Doug, I could talk to you all day about senior living. Your expertise and immersion in the space is very impressive and useful. And we'll have to have you on again to go into some more details about investing in senior living. But for now, let's wrap it up. And thank you so much. Let's let the listeners know how they can get a hold of you and anything else you'd like to share.
So if you want to learn about this space, the easiest way to get to me is if you go to my website, 14plus, you spell out the two words, 14plus.com. You go to the resource pages and download a book I wrote about investing in senior living. You know, the price is free. If you want a paper one, you got to go to Amazon and spend $17 and buy it. But, you know, that's the easiest way because it lists all the things you ought to read and who you ought to go see and which shows are worth your time and all that kind of stuff. And you go there and you get my email address and phone number and all that. I always try and be helpful to people about, you know, them getting started.
Awesome. Well, there you have it, folks. Visit Doug's website. We'll make sure that the show notes that's in the show notes. And I have read Doug's book and it's chock full of really amazing information to help wrap your head around the space if it's something that you're interested in investing in. And so thank you so much, Doug, for coming on. Have a wonderful day. We'll talk to you next time.
Thanks very much. I appreciate it.